Hey, if you're seeing the title of this video and think I'm crazy, it's a lie, it's a scam, just hear me out for just 30 seconds here while I tell you what this video is all about. I'm a CPA and an attorney. I help small business owners and investors around the country every day in our law firm and accounting firm. We've been doing it for 20 years. I am not a financial advisor. I'm not going to sell you a stock, bond, or mutual fund. I'm not a real estate broker. I'm not going to sell you real estate. I don't even sell cryptocurrency. What I do is help my clients. We do their tax returns, we set up their entities, we do asset protection, and I see clients every day, every week, every year, getting 15% or more in their Roth IRAs. Now, when I've shot other videos on building a Roth and having $1 million in it, I get a lot of lovers and I get a lot of haters, people that think I'm crazy and it's not possible. I will tell you 4 ways we're going to do it. 4 ways. I'm going to tell you it is possible, and I'm going to give you 4 ways where maybe you only have $5 or $6 or $10,000 in your Roth IRA, and I'm going to give you some other strategies, 2 others, where maybe you got a little bit of bank in your IRA from a rollover from a 401k. People, this is real. This is true, and I'm not selling something. And if there's any benefit to myself, and I will come clean right now and tell you there's 2 ways this benefits me. In my law firm, we might set up an LLC for you. You might call us for some advice to help you do this, and you pay us hourly. I don't get a percentage of your rate of return, nothing. The second benefit is we may do your tax return. You may say, oh my gosh, my CPA isn't telling me this. I'd like to work with your accounting firm, Mark. Hook me up with one of your tax preparers. The third way we might benefit is we have a trust company, a custodianship to hold your self-directed IRA, 401k, SEP, Simple Keo, HSA, whatever. So we don't make money on your investments. We have transaction fees if you place your money with our trust company. That's it. Those are my only 3 benefits that I reasonably get. But I'll tell you, your stockbroker and your 401k plan provider, administrator, all those people make a lot more money on your retirement account than I'll ever make. I want you to take control of your retirement account and get 15% returns or greater. And I know you can do it. So without any further ado, I'm gonna give you 4 ways. Hear me out. If you like it below, give me a comment. If you hate it, make a comment. I try to make comments back and try to reply to all the comments I get personally, not my staff. So here we go. I'm going to give you 2 easy ones and 2 cheaper ways to do it, and then 2 bigger ways to do it. Okay, the first way is interest. Now you may say, well, Mark, what are you talking about? You go in and I had literally one of my employees asked the other day, well, I can do a CD, right? I get 1 or 2%. Yeah, we're not doing that. And I will tell you right now, with all 4 methods, you are going to self-direct. With Jim Cramer on Mad Money and your stockbroker and advisor, they say you can't do this, or you're crazy, or you're day trading your money away. Wrong. I have had clients for years and years make millions of dollars in their retirement accounts self-directing. So all these methods take self-directing. That means you're going to fire your stockbroker at Merrill Lynch or TD Ameritrade, Scottrade, whatever. When they say you self-direct, no, you're self-directing in their stock brokerage accounts or their ETFs or their mutual funds, and you're lucky to get 8 or 9%. If you're lucky, right? So you're going to take your money and you're going to roll it. So you might have a Roth IRA somewhere, and you're going to roll it into a trust company, a custodian company, where we hold the money, and we call you on day 2 and we say, what do you want us to do? And what I have clients do is hard money, short-term lending. This is option number 1. I have clients do this every day, and I've been helping clients for 20 years do this. They do give a promissory note to some sort of fix and flipper, rehabber, small business owner, real estate investor, and you take, with due diligence, because you're careful, you take a first position trust deed note, or maybe second position, and that's the world of hard money lending. You might do it after an appraisal and due diligence. I have clients to do that all the time and make 12% annum. That's 12% annual return, and they get 2 points. Sometimes 1 on the front, 1 on the back, 1 on the front, 2 on the back. There's all sorts of ways hard money lenders work. But let's say you average 2% as points on the front. So if you loan 100 grand, you make 12% per annum every day that money's out, and 2% on the front. I have clients do that sometimes 2 or 3 times a year. So if you get 2 points I know the math is hard here, plus your 12% annum, that's a 14% return. If you do it a second time during the year, you get another 2% points, and you're still averaging your 12% as the money's out. That's a 16% rate of return. I have clients that average 15 to 20% in their retirement account, their IRA, their 401k, their Roth, by loaning money out. Now, real quick, because I'm going to get haters down below. You're going to say, Mark, that's crazy. That's ridiculous. You're going to lose your money, the real estate market. That's why you have a procedure. You don't DIY, which means do it yourself and try to do your own promissory notes by downloading them on Google. You're going to get good legal and tax protection advice to do proper lending the right way. And I've got other videos and books and all sorts of support out there that's free to learn enough. Then you call a lawyer at our office and say, hey, give me some help. We charge hourly to help you, and we're not expensive compared to many, many other lawyers that are going to rip you off maybe, and other lawyers that don't know what they're doing. And there's other lawyers just as good at us as us that are affordable. Okay, that's option one. Now, thanks for watching this video. I'm going to try to make it as quick as possible. Number two, and this is an example. I had a friend call me on the phone last week and tell me about it, and before I shot this video behind the scenes here at my studio, I called my buddy and said, hey, will you run me down the numbers again on what your son did so I can share it on a video? This happens so often, I'm astonished that people are upset that I talk about making more than 10% in a retirement account. Okay, so he called me up and he said, my son bought a mobile home. Now I'm gonna change the numbers for easy math here, but I'm only going off by $1,000 or $2,000. He bought a mobile home down the street. I could drive over there. It's 2 miles from here. He bought a mobile home, and I want to do the math here. 37 grand was the purchase price on a single wide, 3-bed, 2-bath, single wide mobile home. It's a longer one. I know some of you are like, I'm never going to live in a mobile home. You're not. This is your retirement account buying a mobile home. Anyway, he put down $4,000. That was his down payment. And he got a loan for 33 grand, a seller carryback loan. He's doing a 5% loan, 20-year AM. The mortgage payment is around I wrote it down over here, $225. Now that's around, you can do mortgage calculators for around $30,000. You're gonna see a mortgage payment of around $200 to $225, $190 to $225 in this range. Then I said, what's the pad rental? Because it's gonna include water, sewer, garbage, and the pad rental is around, he said, $360. So he's around $360 on that. So he's out every month when he bought this little mobile home, he's out around $585. And I'm gonna round up and say $600. I said, well, what's this little mobile home renting for? Because it's in a college town, there's a demand, and there's mobile homes that rent for this or more or less all over the country. He goes, I'm getting between $850 or $950 for the same mobile home across the street. So he goes, we're planning on $900. So they're gonna rent this thing for $900. Now, look at the cash flow. That's $300 a month in cash flow. Okay, times 12, that's $3,600 a year in cash flow. Now, is he gonna have repairs? Sure. Set aside 3 to 4 months as a cushion. We're gonna set up as a law firm an LLC for you. This LLC is gonna be owned by the IRA, and the IRA is gonna go out and buy this cute little mobile home. Is there such a thing as a cute mobile home? Of course there is. He's gonna cash flow easily over $3 grand a year. These little mobile homes are cash cows, or little ATMs that pay out cash flow. Do they appreciate? Hell no. They're gonna probably go down in value. You wanna buy other rental properties that appreciate? Feel free. I'm just giving you an easy example with $4 grand. You can do this in a Roth IRA tomorrow. You can borrow in your Roth IRA. I've got books and videos and all sorts of crap out there on this to help you realize this is very doable. People have been doing this for years. Let me just say, $3,000 on a $4,000 investment. That's a 75% return. You think I'm crazy? Cut it in half. Guys, you can do well. I have clients doing rental properties exceeding 20% all the time. Now, I said 15% or greater. That's right. I just got chills saying this because this is so powerful. If you think this is crazy, cut it in half. Cut it in half again, you're still making over 15%. Buy rental properties in your retirement account. That's option 2. I own rental properties in my health savings account. I've owned them there for 8 years. Cash flowing a couple $100 a month in my health savings account. Yes, you can do that, but your stockbroker's not telling you. Wall Street's not telling you. Where's my book? My cameraman, Dylan, throw me a book. This is common problems that are out there. This is so real. Now we're gonna see if we can catch this on camera. Just give me a toss. This is my newest book coming out in July, The Tax and Legal Playbook. Second edition, July 2019, the game has changed because Donald Trump, love him or hate him, and the GOP, they made it better for the small business owner and investor. Now his politics and his tweeting drives everybody crazy. I don't care if you're a Republican or a Democrat. His communication skills are not great. But guys, take advantage of the rules of the game. This is the playbook. Check it out on Amazon, 5 stars. It's awesome, great book. I have a whole chapter on how to self-direct. Okay, number 3. I hope some of you are making it through this. You wanted details, I'm giving number 3. Now number 3 is, and my son knows that I've shared this strategy before on video. He's cool with it. This is exciting. I'm not gonna tell you what town or who the investors are, but just a general example of what he's doing. Dylan's in the room, in the house. Is it okay, Dylan? He's giving me green light. All right. We got an LLC. My son is a college student. He is not rolling in cash, but he's got people, investors, friends, and family that have big money in their IRAs from old jobs. We had a contact in our family circle that said, hey, Dylan's good, he's handy, he knows real estate, he's been around Mark and his family for years, he's doing a little fixer-upper, I know he just bought a new little home, I would love to invest with Dylan. Now this happens all the time with my clients around the country. I have doctors in California doing this in Tennessee all day long, in Chicago, in Indianapolis, in the breadbasket of this United States of America, there is great rental properties owned by IRAs. There's a house next to me in my neighborhood where I'm renting because we're building a new house. It's owned by an IRA. My neighbor's house is owned by an IRA and he has renters in there. It's everywhere, people. Just open your eyes. Now, here's what my son did. He owns 20%. His investor, who's not a person, it's an IRA, owns the other 80%. He dropped in 120 grand. They bought a little property for 90K, and that was the purchase price, and it's a fixer-upper. They threw the first 30K in there. It needed new electrical, a bunch of crap. We borrowed another 40 to go finish all the rehab. They're gonna be into this thing 160 grand when they're done. They're about a month away from being completely done on this rehab. The projection easily, there's already comps in the area for 200 grand or more. I will be conservative here. They could sell this thing for 200 grand. Now I know there's gonna be realtor costs and closing costs. There's some interest on the 40 grand, fair enough. Let's say instead of netting 40, they net 30, they net 30 grand. He invested 120. That's a 25% return. Now, that's option 1. I'm meeting with Dylan and his investor, and they're deciding, do we sell this and cash out and make a 25% return on this money? Or do we, maybe we don't do that. Maybe we strip out the equity on an 80-20 loan. If it appraises for 200, they can borrow 160. And this is a 3-plex, by the way, people. It'll cash flow well over $600 a month. By the time they rip out this equity and pay the mortgage payment on this, they've got 160 grand to do the deal again. Now you may say, well, he only gets 80% of the 25% return. That's true. Dylan's gonna get his profit as the labor guy in this. But remember, we're shooting to sell this for well over 200, and we're still nailing down the costs on this, but I'm trying to be careful and conservative. So if he gets 80% of a 25% return, we're still exceeding a 15%, people. And this is on a fairly conservative fix and flip. They're only gonna make 30 to 40 grand. You watch all the fixer-upper shows, this is doable. People are doing fix and flips in their IRAs and 401ks and Roths all over the country. How you can get 15% or greater. Isn't it funny when Mitt Romney was debating 6-8 years ago with President Obama, they asked him to do a financial disclosure, which he did. He had over a $20 million IRA because he was using his IRA in his business deals, and it was getting a return far exceeding Wall Street. And Wall Street was like, shh, don't tell anyone. It was like buried in the Wall Street Journal on page 12, because the last thing Wall Street wanted you to let you know is that you can sell to your retirement account and get bigger returns. That's right. Every time you pass go, you can put in $5,000 or $6,000, but your rates of return can be 10 times that. 4th option. This was a phone call today in my office again. It happens every day. I had a client. Now, I remember these were lower value investments where you're still getting a great return. These are ones where I have clients that have 100 or 200 grand to go. This client bought a property for 300 grand 10 years ago, and he sat on it. I'm gonna call this speculation. And I have a lot of clients that speculate on property inside their retirement accounts. They speculate on currency, they speculate on raw land, on rental properties. This is interest, this is rental property, this is a flip. And and I've got other examples. I've got clients buying hair salons and restaurants and businesses inside their retirement accounts. I could just keep going here, but I'm just trying to give you 4 of a variety. Speculation. He bought a piece of property, raw land, by an interchange 10 years ago. He knew that there would be an overpass going in there at one point, and there would be a commercial development going in at that overpass. They just had it appraised. He has a buyer interested, and they might go in on a development deal. They're talking it's worth $2.5 million. That's right. It's in a Roth IRA, people. But you say, Mark, you can only put 5,000 or 6,000 in a Roth. Guys, this is like a Monopoly board. Every time you pass go, you get $200 in Monopoly. With a Roth IRA, every time you pass January 1st, you get to put in $5,000 or $6,000 or $7,000, depending on your age, blah, blah, blah. That's what the rule's been. Every time you pass January 1st, you can put more money in. But if you land on Park Place or Boardwalk, that's good money. This guy bought raw land on Boardwalk, and now it's worth $2.5 million. I have clients that buy raw land with billboards by the freeway with their retirement account, and all the billboard rents go into their retirement account. You can do that. I have clients buy racehorses, buy cattle, buy restaurants and businesses and hair salons and cement companies and whatever. You can do that with your retirement account. People, thanks for watching. If you want to buy a book, great. Type Mark J. Kohler into Amazon. There's a book there. You can go to my website, markjkohler.com. I've got a tax and legal library with 60 videos, a few $100, tax write-off for you, and I've got all sorts of training material on stuff like this. But my point is, quit listening to the noise of Wall Street and financial advisors that it's an ETF or a mutual fund for 8%. You can invest in what you know. And yeah, that's true. I have a custodian trust company. Matt Sorensen and I directed IRA.com. And if you want to get there and put your money over there and open an account and roll over your money to a custodian that'll let you invest where you want, go to directedIRA.com. Now, I'm just telling you where it's at. There's other custodians and trust companies out there. That's where we like to go. And if you need a lawyer that understands this or an accountant, all my attorneys are tax attorneys that can set up an LLC for you in any state in the country for you to self-direct your IRA. Give my law firm a call, KKOSlawyers.com. And just give us a call. You can make an appointment with any of 5 lawyers. They'll start getting your entity set up right now. So it's doable. It's real. There's no scam here. I'm not trying to sell you riverfront property in Arizona, or was it oceanfront property in Arizona? Oh my gosh, I get my country songs mixed up. Anyway, this is for legit. I'm not going anywhere. Google me, I'm for real. Get out there, get some more reading material, some videos to watch. Thank you for watching. Keep living your American dream, and you can do it, people. You can do it with your IRA. Thanks. Thanks so much for watching that video, and I want to be your source for tax and legal strategies. It's hard enough to live the American dream without being out on the web, on Google, trying to find answers to complex questions and just clicking a mouse, hoping you got it right. My team and I want to be a huge resource to you. The law firm, accounting firm, my education resources on my site. Please continue to follow these strategies. I know they'll save you thousands. Now, click here if you want to be a part of my newsletter. It's awesome. Weekly updates and deadlines and strategies and tips. Also, subscribe to my YouTube channel. You'll love it. And make sure to click the bell icon so you get a little ping whenever there's a new video. And finally, check out my site, markjkohler.com, with all sorts of videos, probably 70 plus videos, 30 plus hours of content that'll save you thousands.